Right when you think you're about to turn the corner as a trader, the market does something cruelly simple. It hands you two losses. Not a blow-up, not a disaster. Two normal, ordinary, totally survivable losses. And then you do the thing that ruins careers. You treat those two losses like an insult that needs a response. You widen the next stop because you can't be wrong again. You size up because you need to get back to even. You take a setup you would skip on any other day because you don't want to end the day red. And if you've lived that loop, you already know the ending. The third trade isn't a trade. It's a mood. In this video, I'm going to give you the two-loss rule that saved my trading career, why it works even when it feels like it's costing you money, and the exact shutdown protocol that stops a bad hour from turning into a bad month. Stay with me, because near the end I'm going to give you the one question that decides whether your second loss was just variance, or the start of your personal spiral. It's 9:41 AM and you're trading Eurodollar on a 5-minute chart. The first setup is clean, pull back into structure, risk is defined, entry is standard. You take it, it ticks against you and you get tagged. Small loss, annoying but normal. You reset, you wait. 10 minutes later, a second setup shows up. Almost the same picture. This one should work. You tell yourself that sentence every trader tells themselves right before they stop thinking. This one should work. You enter. It goes 2 candles against you immediately and you're out again. 2 losses. And now the screen looks different. The chart didn't change, but your relationship with it did. Your shoulders get hot, your jaw tightens, your attention narrows. You're not reading price anymore, you're reading meaning. What does this say about me? Am I losing my edge? Is today one of those days when nothing works? That's the moment your trading stops being a probability business and becomes a courtroom. You are the lawyer, the market is the judge, and the verdict feels like it's on your competence. Most traders don't blow up because they don't understand entries. They blow up because they don't understand what 2 losses does to their state. Here's the pattern you don't see while you're in it. The first loss triggers disappointment. The second loss triggers threat, not I'm down money threat. I might not be as good as I think I am. Threat. And when that alarm goes off, your brain does something predictable. It borrows control from the part of you that plans and evaluates, and hands the wheel to the part of you that reacts. That's why the third trade feels urgent. That's why you start flipping timeframes like you're searching for a loophole. That's why a chart that looked like noise suddenly looks like a perfect setup. Your brain is not trying to make money in that moment. Your brain is trying to end discomfort. And discomfort has one demand: do something. 2 losses also triggers recency bias. Your last 2 outcomes stain your next decision, even if the next setup is completely independent. You act like you're due for a win, or like the market owes you a rebound. That's not analysis. That's the gambler's fallacy wearing a trading platform. Now let's talk about the cost, because this is where the career damage hides. 2 losses is not the problem. The problem is what you do next to avoid ending the day with that feeling. You take a mediocre trade and turn it into a large risk trade. You move the stop because it's just a wick. You add because it has to bounce here. You overtrade because you want the screen to give you relief. And the worst part is that sometimes it works. You press after 2 losses and you get saved. You rip a win and you feel relief so sharp it almost feels like victory. Your brain files that away as proof, not as variance, not as luck. Proof. Now you've built a belief. If I just push after 2 losses, I can fix it. That belief is how trade is becoming consistent for years. They're not randomly reckless. They are trained by occasional rescue. That's why the 2-loss rule matters. It interrupts the training loop. Here's the rule. After 2 losses, you are done for the session. And let me be precise about what done means, because traders love loopholes. Done means you do not place a third trade to earn back anything. You don't switch markets. You don't drop to a lower time frame to feel busy. You don't suddenly become an options scalper because Forex isn't moving. You're not allowed to change the game right when your emotions change the rules. If you want a simple way to think about it, 2 losses is the smoke alarm. The house is not burning down, but something is in the air. You don't start cooking harder to prove you're safe. You open the windows, you step back, and you check the situation before you light anything else. Some traders use the rule as 2 consecutive losses. Some use it as 2 full R losses, even if there's a scratch between them. Either can work as long as you choose one and you don't change it mid-session. The point is consistency. The point is removing the moment where you're emotionally negotiating your own guardrails. You close the platform, you stop taking new risk, you step away. And before you argue with me, I know the objection. What if the next trade is the A+ setup? What if the market finally starts moving? What if I'm quitting right before the good part? Yes, that's exactly why this rule works. Because you're not protecting today's opportunity. You're protecting your ability to trade tomorrow with a functional brain. The 2-loss rule is not a money rule, it's a state rule. It assumes something brutally honest. After 2 losses, you are statistically more likely to trade worse. Not because you're weak, because you're human. If you can accept that, you can build a career. If you can't accept that, you'll keep trying to prove you're different. And the market will keep collecting tuition. Now, the rule only saves you if it's non-negotiable. So let me make it practical. Rule 1 is you define what counts as a loss in advance. Not in dollars, because dollars mess with your head. In R. 1 R is your planned risk for the trade. If you lose 1 R, that's 1 loss. If you scratch for a tiny loss because the setup failed instantly, decide whether it counts as a full loss or a half loss. Decide before the session, because the 2-loss rule breaks the moment you start doing mental accounting. That wasn't really a loss. That one doesn't count. That was just slippage. No, it counts the way you defined it. The goal is not to be fair. The goal is to be consistent. Rule 2 is the moment the second loss hits, you execute a shutdown script. And I'm using the word script on purpose because you need something you can do without debate. Mine looked like this. I flatten. I cancel orders. I take my hands off the mouse. I stand up. I say out loud, trading is a probability business, not a redemption story. Then I physically leave the room. Not a little roll back in your chair, not staring at the chart. To learn. Leave. Because if you stay near the screen, your brain will keep bargaining. It will keep offering you reasons to take just one more. So you build distance. If you trade from home, step outside. If you trade on a laptop, close it and move it. If you trade on your phone, put the phone somewhere you can't reach without standing up. You are not trying to relax, you are trying to break the loop. Rule 3 is you replace 1 more trade with 1 review. After you shut down, you do a quick audit. Not a journal essay, a tight check. Were the first 2 trades good trades that lost? Or did I break something? Did I chase? Did I size up? Did I ignore my entry rules? Did I move a stop? Did I trade because I felt disrespected? This is the question I promised earlier. Because if both losses were good trades, then your job is acceptance. You did your job. The market did its random thing. That is the cost of having an edge. If one of the losses came from a rule break, then your job is correction. Not revenge. Correction. And the 2-loss rule forces that choice. Accept variance or fixed process. Everything else is ego noise. This is where Marcus changed how I saw the rule. Marcus trades a mechanical playbook in index futures on a 15-minute chart. No opinions, no I think. If then. But the most important part of his system isn't the entry, it's the circuit breaker. He told me, I don't trust my brain after the second punch. That's what a second loss is. A second punch. So he set a hard barrier. After 2 full R losses, he cannot place another trade unless he resets a control that takes real effort. The point is not the technology. The point is the design. He made it hard to do the stupid thing. Because he knows something most traders refuse to admit. Your worst decisions don't happen when you're clueless. They happen when you're emotional and confident. That's when you justify anything. The 2-loss rule is how you stop trusting your justifications and start trusting your process. Now, there's a subtle upgrade that makes this rule sustainable. The 2-loss rule is not punishment, it is training. You're training your nervous system to associate 2 losses with stepping away, not pressing harder. You're conditioning yourself to protect capital when you're compromised. And capital is not just money. Capital is focus. Capital is patience. Capital is confidence. Capital is your willingness to pull the trigger tomorrow without fear. If you destroy those, one green trade won't save you. That's why the 2-loss rule saved my career. It didn't save one day. It saved my relationship with trading. Now let's deal with the pain point that breaks most people. Sometimes you stop after 2 losses, and then the market becomes clean. It trends, it respects levels, it offers perfect entries, and you're on the sidelines feeling like you got benched right before the comeback. If you don't handle that emotion, you'll break the rule next time. So here's the reframe. Missing opportunity is a small cost. Trading while compromised is a catastrophic cost. The market will always have another move. Your account won't always survive another tilt. You can prove this to yourself with data. Go into your journal and circle your worst red days. The ones that changed your week. The ones that made you doubt yourself. How many started with 2 normal losses, and how many were actually a 3rd trade problem? That's the pattern. The 2-loss rule doesn't stop losses. It stops the moment you stop being you. Now the final piece, how you come back the next day. You don't come back with, I need to make back what I lost. You come back with one intention: execute good trades, manage risk, accept outcomes. Before the session, write one sentence. I can be wrong twice today and still be professional. That sentence is your inoculation. It tells your brain that losing is allowed, so it doesn't have to fight for identity on every candle. And during the session, after your first loss, you don't get angry, you get curious. Was that a good trade that lost? After your second loss, you don't bargain. You execute the script. Now back to that euro-dollar chart. Back to those 2 losses. Back to that moment where your body wants to do something. The second loss, prints, your position is flat, the urge rises, and the old version of you wants one more trade. But instead you stand up, you shut it down. You walk away with your account intact, your mind intact, and your self-respect intact. Then you review the 2 losses like a scientist, not a prosecutor. Because you finally understand the truth. The goal of trading is not to avoid losses. The goal is to survive them without changing who you are. Most traders lose money, and trading is difficult. This is education, not financial advice. Past patterns do not guarantee future results, and risk management is survival. And if you want the next piece of this, the thing that connects perfectly to the 2-loss rule, it's what happens when your stop gets tagged and price reverses without you. Because the same part of your brain that wants revenge after 2 losses is the part that chases after getting wicked out next.